in late December, the balance sheet was already between the two GSEs $247 billion. So they've been quietly, at the behest of FHFA, the regulator of Fannie and Freddie, buying about $15 billion a month in mortgage-backed securities. They've already been buying it, banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop. It's KP coming to you live from Corona, California. Back at the desk for my Monday and Thursday night video and back on the road again. So it's work, conference, travel season. It's begun. So busy week. Lots to talk about and how it all impacts, obviously, mortgage rates and the start to the year, and just a couple headlines to maybe dissect. But first, I want to pause for those that didn't listen to the Last Word commentary, the Christmas commentary on Friday. We had a nice tribute to Kurt Pfotenhauer, who was vice chairman at First American. He lost his battle to pancreatic cancer last week, and the NBA did an incredible tribute to him. So I always encourage everyone to go to nba.org and see everything that's going on in the newsroom and all the information that's coming out there. He was just a nice guy. We got to meet him just about 3 years ago for the first time at the NBA's mid-winter chairman conference. Just say, hey, yeah, come on, let's go skiing. Skied with him. Just hung out with him. He's just a really genuine, nice guy. And so with my mother-in-law losing her battle to the same cancer about 4.5 years ago, it's tough at the end. And we had a chance to see Kurt this past NBA event at the chairman's conference. So I could not possibly do a better justice to a tribute to him. But what a great man, and definitely very inspiring. So please go to nba.org and check it out. Okay, so what's going on this week? Well, we have lots of news. It's Fed week, and the Fed will meet the next 2 days. So Wednesday, the press conference, the decision's kind of baked in the cake, right? So no one's expecting a cut. And rates, just touched, earlier this year on January 9th, I believe, 5.99% on some 30-year fixed average rate indices out there. So, we're off to a good start. January is good. Just to give you a little insight, some C-level ownership insight of a 3-channel lender. All 3 of our channels locks are up this month compared to December. And January is usually pretty light. So, we're definitely seeing the effects of lower interest rates. And how long will it last? That's a great thing to do, to talk about. We'll find out from the Fed chair if there's any insights, but there could be a new Fed chair announced this week. Now, I was joking 6 weeks ago at the last Fed meeting that I thought President Trump would announce the new Fed chair like right in the middle of the press conference. Well, there was actually talk that they're going to announce a new Fed chair this week. So it could happen in the next couple of days or by the end of the week. And so I also thought it was stupid to go to Davos and talk about a new announcement for U.S. domestic housing policy. And then they didn't really announce anything new over there, too. So I'm glad, I don't know. Seems like I'm trying to figure out our administration. I think I have a pretty good pulse on how they operate. And, so we have a lot going on the next couple days. On Wednesday and Thursday, we have 4 of the Magnificent 7 stocks. I am not a financial advisor. I'm not responsible for your losses, only your profits. But just follow Nancy Pelosi. Her stock her stock picks are doing amazing. She sold some stock picks, by the way, and bought what's called leaps, which are like, long dated options. So go Grok or Google search that, and you'll find out what's going on there. But we have Tesla reporting on Wednesday, Microsoft, Meta. These are like kings of AI. They are all about AI, hyperscalers, multi-trillion-dollar businesses. And then I believe Apple, for those of you that are non-Android users, all the people, all the sheeple, you report on Thursday. And all kidding aside, I hope they do well. I love the stock. I think it's a great company. So lots going on with the flow of money. Stocks and bonds, they kind of move back and forth. There's $200 billion announced by the administration of mortgage-backed securities going on the balance sheet of Fannie and Freddie. Now, what's interesting about that is, coming out of Dodd-Frank and the Great Financial Crisis, these PSPA, agreements, there was a cap on how much the balance sheet can be loaded up between the two, Fannie and Freddie. $450 billion total, $225 each. In late December, the balance sheet was already between the two GSEs, $247 billion. So they've been quietly, at the behest of FHFA, the regulator of Fannie and Freddie, buying about $15 billion a month in mortgage-backed securities. They've already been buying it. And of course, the announcement for the additional 200 was to go from the balance sheet being around 247, 200 gets them up to about 450, which is their cap per regulation. So, when that was announced, I believe it was January 9th, we saw mortgage interest rates get to the lowest level in 3 years, over 3 years, that 5.99% 30-year fixed rate. So that also tends to bring down, volatility when there's a little more liquidity, right? The flow of money. We buy and sell money. The secondary market is cold, heartless, and unforgiving. You've heard me say this before. So if there's more liquidity, then that is better for rates. Even if it's just this year and just for the election purposes, I don't care. We're going to lock loans whenever we can get it. And I think pretty much everyone here listening is in the ecosystem where we want to do more loans. Obviously, the longer term solution is more housing supply. That is the bigger deal. But lower rates do bring more borrowers back into the fold. And every situation is different at the local level when realtors and originators are trying to lock arms and put people in houses. And so it could be an affordable win, on the margin. But yes, existing homes, we need some more of that. Now, if rates are lower, existing homeowners have, less of a spread. If rates are lower, kind of close to their 2, 3, 4% rate, with all the equity they've gained over time, they might be willing to trade that and sell the house and then take that money and put it down on the next house. 75% of home sellers are home buyers. So unlocking existing homes is probably more of a solution with lower rates now than the long-term solution, obviously, of having more housing supply. So this, anyone poo-pooing this $200 billion thing, like I don't know what planet you're on, it's only a good thing to have lower rates. It's all we talk about all the time. So I just can't believe I read somewhere that I'm going to calm down, get back to a 6, that anyone would say anything bad about the $200 billion more dollars of mortgage-backed securities and liquidity being pumped into the system. It's great for rates. Okay, I digress. So government shutdown is looming. Last week I mentioned I'd read something that the government shutdown. We had some minibus bills that were passed. So I read this last Friday from Brian Chappell and Potomac Partners, and then also on our MBA executive call this morning, we talked about a couple of these bills are going to fund like HUD and VA and USDA. These things are in a good spot, and the House passed some bills. Now they go to the Senate. So the House is off this week unless they get called back to go work, and they would get called back if there are any markups in the Senate for the bills that passed in the House. And so the Senate always marks it up. They almost never take it as is, especially with this DHS bill. I won't even go there and talk about ICE and everything that's going on there because I know people get triggered. By the way, there was a massive ice storm, like an actual ice storm, and I hope everyone's surviving. I've been seeing some terrible videos of the wind damage that came through here. There's 30 deaths from this storm in the last couple of days, from this ice and snowstorm. So 30 people are dead because of the weather just in the last couple of days. So certainly thinking about all those communities that are impacted and affected. Some of the videos of the damage is pretty bad. And so anyway, if this bill, these bills don't pass and we have a government shutdown, it'll be parts of the government will be shut down, not a total government shutdown like we had prior to the November election. So it's clear that government shutdowns are being used to exert political will, to influence elections or influence particular bills. And so I can't say that I know if the Bureau of Labor Statistics is going to be shut down or not, because we're just now still getting data from like November, right? We've got PPI coming out. We had PCE last week. We're getting like November data, and like it's almost February. So we're still kind of a little bit behind. And so that creates a little bit of a fog and a little bit of uncertainty on where we actually stand for the Fed, who's meeting the next couple of days, to be data dependent when the data is stale. Although there's plenty of other places to get it, but they have their traditions, and so a government shutdown. I maybe if put down in the comments below if the BLS is at risk of being shut down. I think so, but I don't 100% know, so I apologize for that. But if we have some more delays in data, that could push out more potential Fed actions later on. So government shutdown probability is over 80% now. So that's on Polymarket and Kalshi. So we'll see what happens there. And Rick Reeder, who is the BlackRock chief and fixed income securities chief investment officer, he is someone that when he has a clip on CNBC, man, I stop and listen. I have for years. He's really brilliant. And so it'd be interesting if they took someone who's not, part of the Fed, part of that kind of just the way that groupthink has always been, and took someone who is more of a market participant, kind of like Treasury Secretary Scott Bessent. I think most people, even, regardless of what your feelings are for this administration, if you've been paying attention, people really like Scott Bessent, our Treasury Secretary. He's got a great calming effect, and he seems to be someone that the markets respect. And so we may find out about Fed independence and how far that will go, and who the new chairman will be, replacing Chair Powell, who would be a lame duck, serving his time through May. GDP was at 4.4% in Q3, and our savings rate's down to 4.2% in the third quarter, and lowest since the fourth quarter of 2022. Wage growth is slowing in this no hire and no fire, labor market. Credit card debt is up, auto balance is steady, and student debt is up. And so, I start to read all these things about it's GDP's great, but then you've got people, this K-shaped economy, right? Like who really benefits from GDP? Over 1% of our GDP is, data center growth and hyperscalers and AI. I saw a quote from Paul Krugman, who is a Nobel laureate, extreme left. I mean, obviously, you have to take, some of the things he says, with a grain of salt, but obviously a brilliant man. He had a pretty cool quote that I think is kind of fitting. For most Americans, economic growth is a spectator sport. And if you think about, we got 4.4% GDP. I mean, a lot of people aren't feeling it right now, especially if the power's out and they just went through a snowstorm. And so, but all we can do is hope that this, one big beautiful bill will have some stimulus, and which seems to be front loaded the first 6 months of this year, help people with their tax returns and keeping more money in their pocket, lower interest rates, lower rates from the Fed, lower credit card rates. A president is still talking about a 10% cap on credit cards for just the year, conveniently after the election. Gotta love politics, man. I don't, but I try and read the tea leaves. So there's a lot going on right now, and having said all that, just taking a step back, rates are at a great spot, which is obviously the big driver for all of us. The only thing that I think I could add to this discussion is that PPI is coming out, so we get a little bit of insight on producer price index, and that flows into the PCE on the next PCE report, which the core PCE, personal consumption expenditure, is the Fed's preferred measure of inflation. So we'll keep an eye on earnings, flow of money, low interest rates, Q4 earnings season, Fed press conference, potential announcement of the new Chair Powell replacement, and will the government shut down? Whew. Have a good one. Cheers.
Hey, it's KP coming to you live from Corona, California. Second and final update of the week from the desk. Fed had spoken yesterday, so I'll recap that a little bit. And then we're off to the races, off to another show. We've got the Florida Amelia Island Mortgage Banker Association, the IMB, Independent Mortgage Banker Show. That starts on Monday. And, there's three big shows the MBA puts on, and this is one of them. So great way to kick off the year as we finish up the month. And I would say generally it's been a pretty good January. I know for some of us, it's freezing cold. We had some storms and kids at home probably a day or two longer than we wanted, and such is life. So we continue on and we move forward. Okay, so let me recap a little bit of the Fed meeting. I'll talk about Davos at the end if I have enough time. Mortgage Banker Association, by the way, released their January forecasts, and it's a great deep dive if you ever want to check it out. They release it once a month. They update all their numbers, and it's pretty much all the macroeconomic numbers and the mortgage numbers, including how much business is going to get done this year. And you guys always know I'm talking about Teslas because I have one, and they just reported earnings. So I'll get into some of the earnings reports this week. Not a financial advisor, not responsible for your losses, only your profits. And I read today that a child was struck by a Waymo, which is, the self-driving car that's out there. Ending is not as bad as you think. So cliffhanger, teaser, whatever you want to call it. Okay, Chair Powell is on the way out. May is his last meeting, but it felt like his last press conference yesterday because this is the last one before the administration says who's replacing him. Now, I read in some press that that's going to be announced tomorrow, and I read in some other press that there was a cabinet meeting today that the announcement would be next week. So everyone's waiting to see what will happen there, and then you have what's called the lame duck, Chair Powell, right? So he's in waiting to go into hiding, retirement, or continue. He could continue on as the board and be part of it. Seems like he's pretty stubborn and wants to stay stuck in and influence the board. He did not make any comment in the press conference whether he would be leaving or not in May. So we'll see. He may want to feel like his legacy is left and not hurt by whoever the new person, not named yet, that will be coming in. So we'll see how that all plays out. So no cut, totally expected to have no cut. And remember, we're still dealing with like a data catch up. Remember, they're data dependent. So 2 years in a row, from September through December meetings, they made cuts, then paused going into the next half of the year. We might not see another cut until September again this year, depending on how the economy does and what the data says. We could have a government shutdown tomorrow, although it's looking like it won't be like a broad shutdown. So a lot of, they call them mini buses, bills have been passed to fund a lot of stuff, especially for things in our industry. And the big healthcare was the big debate at the last government shutdown. It lasted 43 days, and I don't really hear anything being talked about healthcare. And now it's the DHS funding because of people's on the Democratic side opinion of the funding and how ICE is operating. And so, not making opinions here, but just stating facts. That is why we're having a government shutdown. So maybe. Although the White House did say there could be a 2-week reprieve to kind of work out a deal. So pass everything except DHS funding, and then, which would be nice for all of us traveling to have air traffic control and TSA and all the things. Anyway, so government shutdown. If it were to shut down the BLS, which is not looking like, we would have more distorted data or lack of data, which would push out rate cuts even further. But for now, the data is catching up, and here's what the Fed said. Their statement was a little bit hawkish, right? So they think the economy is generally improving, and so is labor. And on inflation, there is disinflation, right? Like that means like it's going up at a slower pace, still going up, always going up, which sucks. As long as your wages go up, then that's okay too. And so, if goods inflation continues to see disinflation, then that's a win on the inflation front. However, I believe they said, services disinflation was slowly improving. I apologize for the misstep there. I'm trying to remember everything I ever take notes of. And so he did mention that the jobs picture was improving, but still not good. So a lot of government jobs have been cut, but white collar jobs have been increased. And the net jobs were down 22,000 a month. So that's not good. So if labor weakens, and I think there's two big things that the administration has a problem with the way the Fed operates. Number one is that if they don't cut rates, we pay more interest on our debt, okay, and we still run a deficit. So debt is the overall number, and the deficit is like the monthly as you go. We're running about 6% of our GDP in debt, so we're 106. We're not as bad as Japan, but Chair Powell made it very clear, like he always does, that like, hey, they're not in charge of fiscal policy, and they need to get their house in order. And both, parties, when they pass these bills, they're spending, and we are not curbing our spending. So the idea from this administration is we're going to grow our way out of it. We're going to have this 4.4% GDP reading like we had, although the trade deficit came out today and it was not good, it was really high. We're importing a lot. But if you looked at the last PPI report, we were paying a lot of finished goods. So we're importing a lot of goods. And if we import from China, we're importing deflation, but we're still importing a lot of goods, which means we're building a lot of stuff. We know that 1 to 1.5% of this GDP is all on data centers. It doesn't really help people in the economy. And so, if wage inflation doesn't keep up with whatever the inflation number is, debate whatever you want. We're looking at 12 months ago rent and 12 months ago prices, and today's prices are less than 12 months ago. But the Fed, the other thing, other than not getting the amount of interest we pay on our federal debt, the other big thing the administration has a problem with the Fed is how they use old models. So remember, their models that they've been using basically says, hey, you have to break the economy, turn the volume up. You have to break the economy, you have to break labor, right? You have to break labor, which we look at, initial jobless claims every Thursday, continuing claims. You have to break labor to be able to say, okay, we need to cut to support with liquidity the economy. But if you're looking at information that's 12 months old, what is the current labor picture? If you're looking at information from the BLS, which always gets corrected by 800,000 or more jobs once the QCEW comes in. Remember, when the states reconcile like a year later and they go, oh yeah, it's way worse than you've been saying the first Friday of every month, that model's broken, right? And so, so he was asked a question, are you forward looking? And he said, well, we are forward looking. Look at the dot plot. They call it the summary of economic projections. We do make forward guidance, just like the NBA has some forward guidance that I'm going to go over here in a minute. So they're saying we are forward looking. But I will tell you, at Chair Powell's core, he does not want to have inflation run away. So I don't think they're going to cut the rest of the time he's there, in my opinion. And I don't think they have to. Now, the administration is like, you're dealing with old inflation data, you're off. And if we watch the good folks at MBS Highway, they give us all the updated true numbers in real time. And they would probably agree with me, and I agree with them, that the picture of inflation that the Fed and all their economists, which Chair Powell said are the most amazing cadre of people he's ever worked with and you will ever work with when giving advice to whoever the next chair will be, the way they've always done things may not make sense. So it's something that's debatable, and we'll see if there's any kind of shift in the way the models work. In the meantime, the best thing we can do for the lower K and the K-shaped economy is get inflation under control. So if they're looking at old data and they think inflation is not under control, or they think the job market is soft, the unemployment went down last month to 4.3. So they kind of pause on that. Remember, they got all kind of in a tizzy when it got up to 4.5. And, but if people are leaving the workforce, they don't show up in the unemployment claims or continuing claims or in the unemployment rate. So then you look at the U6 rate and you see what that is. Again, it's a lot of data that they're looking at, but, I just read that, Amazon and some other major mega caps cut a ton of jobs. I mean, more than we're creating in the entire economy in a month. And so is labor strong? Is the economy strong? And if people aren't feeling it on the lower K of the end, then, maybe it's not that strong. So where is neutral? Where are they going to stop, right? I looked at the CME tool, the Fed Fund Futures tool, said there'll be a cut by April. And there'll be another cut in October. That's as of today, after a somewhat hawkish statement. So where will it be? Where's neutral? So we're at the higher range, the higher end of the range of neutral. So we're not at neutral is kind of what they say. Plausible range of our estimates of neutral, loosely neutral or somewhat restrictive. So we're well positioned to let the data speak to us, which is coming late and may not come on time again if there's a government shutdown. Then he talked about being at the Lisa Cook trial, which was the most important trial
in the courts for the Fed in 113 years, according to Chair Powell, who personally attended. So Fed independence is a deal. He says he answers to Congress, which was kind of a way of saying, I don't answer to elected officials, gave advice to the next chair. Don't get involved in elected politics. Stay out of it. Don't do it. Reminded me of that old 80s commercials about drugs. Don't do it. So, again, he wasn't getting into whether he's leaving. And, in their models, they didn't have a 100-year pandemic or a trade war in the models. So we're in a trade war right now, according to him. Although they've said repeatedly that tariff inflation is a one-time pass-through, and then we move on. So which one is it? I don't know. So getting to the MBA numbers, the MBA has us at 6.1%, the average rate for 2026. We're there now, right? We're between 6.1 and 6.2. They have the 10-year Treasury at 4.2, and we've been above that. Now, the 10-year Treasury is something actionable to listen to here because, there's technical levels, right? We kind of touched below 4 briefly a couple times last year, but we've pretty much been between 4 and 410 or 4 and 420, the Elon line. And then we were kind of hovering in that 4 to 410 for quite some time. Then we hovered above it a couple months ago, and we've been between 410 and 420. So it's the higher end of that little range. But rates really didn't get worse because the spreads between the 30-year fixed rate mortgage and that 10-year Treasury yield have been compressing because it's been less volatile. Kind of not a lot of surprises on the front. We kind of know that, the bias has been for labor to continue to weaken. So we'll see with this first jobs report coming out next week, is labor still weakening? Do we believe the numbers? Well, the market's going to believe it because that's the data we have to work with. And, if it's a January surprise of good labor data, we could see that range where it's been now above the Elon line, between 420 and 434, we could see the 10-year Treasury kind of drift a little higher. So we need labor to weaken if we want lower rates materially, but rates are good. They're at 3-year lows. I see videos out there of people talking about refi booms. There's no refi boom, right? But rates are good. And they're staying good for longer. So the psyche of the borrower is like, hey, your rates are in a good spot. They haven't really moved. If my lease is coming due and I'm thinking about being a first-time home buyer, this is a good spring purchase season and summer to do it at. Refinance business has doubled since 2023, okay? So like $700 billion in refinance business was done last year. And the number for the forecast for the MBA is actually 760. So I don't know if you want to call it a boom or the rates aren't going to come save you. Maybe your company's rates suck. But dude, that's a lot of refinance business. And so the number is 2.2 trillion overall. So slight increase in purchase, a little bit bigger increase in refinance business. 2 trillion done in 25, 2.2 forecasted to be done with, in my opinion, a surprise to the upside if we catch a bid on rates. The unemployment rate is, I believe, according to this MBA forecast. Let me try and not mess up my video here. I showed them having it at 4.3 last year and 4.5 for the year. And so that's good. CPI at 2.8. We'll see. Okay. Davos, if you haven't had a chance and you get some time this weekend, go to the CNBC clips, all the clips that they put out. There are some incredible business leaders around the world talking about business and the economy and fiscal policy and monetary policy, and it is worth the time. I'm not a big TV watcher. I couldn't sit there all day and watch 3 days of Davos Economic Forum, but I could watch clips of people that are titans of business, and Christine Lagarde, head of the EU Central Bank. It's pretty amazing. So I don't want to get into it, but just go check it out. Selma Happ, economist at Cotality, she's amazing. She actually put out an article this week after my Monday night video where I said existing homes is where we need to unlock supply for housing. 75% of home sellers are home buyers. That means 25% are not buying another one. So that 25% of existing homes, as rates stay lower, that's a big unlock. And she wrote an article about it this week. And then the Waymo that stuck a child, we all have kids. Some kid darted out in Santa Monica last Friday from behind a double parked SUV, darted out in the street, and the Waymo slowed down from 17 to 6 miles per hour,
better than a human who only would have gotten to 14. And they saved that kid. Gotta love the tech. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.